Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Baxter International Inc. Annual Report. Baxter International Inc. offers a diverse range of healthcare products and services to various customers worldwide. The company operates through three main segments: medical products and therapies, healthcare systems and technologies, and pharmaceuticals. Under the medical products and therapies segment, Baxter provides sterile IV solutions, infusion systems, parenteral nutrition therapies, inhaled anesthetics, and surgical hemostat products. This segment also includes advanced surgical equipment, smart bed systems, patient monitoring technologies, and respiratory health devices. The healthcare systems and technologies segment offers operating room integration technologies, precision positioning devices, and other accessories for the surgical space. Additionally, this segment provides specialty injectable pharmaceuticals, inhaled anesthetics, and drug compounding services. Baxter's products are used in various settings, including hospitals, nursing homes, rehabilitation centers, ambulatory surgery centers, doctors' offices, kidney dialysis centers, and patients at home under physician supervision. The company sells its products through a variety of channels, including direct sales force, independent distributors, drug wholesalers, specialty pharmacy providers, and alternate site providers. Baxter's global presence spans Eastern Europe, the Middle East, Africa, Latin America, Asia, Western Europe, Canada, Japan, Australia, and New Zealand. With over 90 years of experience in the healthcare industry, Baxter International Inc. has established itself as a leading provider of healthcare products and services worldwide. Baxter International Inc.'s stock price has significantly dropped by over 38% in the past year due to a series of unfavorable news events. The company's quarterly financial results have been disappointing, with earnings per share, EPS, consistently missing analyst forecasts. In its fourth quarter 2025 earnings report, Baxter reported an adjusted EPS of $0.44, below expectations, and provided a lower-than-expected profit outlook for 2026. The company has also faced challenges in its product portfolio, including shipment holds on its Novum infusion pump due to safety issues linked to 2 deaths. Additionally, the company has experienced ongoing conservation of IV fluids by healthcare providers, leading to weakness in its infusion pump and IV solutions segments. These operational impacts have contributed to a downward revision of Baxter's full-year 2025 operational sales growth forecast. Furthermore, the company has reduced its quarterly dividend to $0.01 per share starting in January 2026, indicating a cautious approach to shareholder returns. The cumulative effect of these negative news events has led to a significant decline in Baxter International Inc.'s stock price over the past year. The Baxter International Inc. market capitalization of $10 billion is significantly larger than the average industry peer of roughly $1 billion. This shows that Baxter International Inc. holds a significant advantage in their industry. Baxter International Inc. trades at a lower price-to-book ratio of 1.33 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The leverage on the balance sheet appears elevated, with liabilities of 73% of total assets. This raises some concern, and we should examine the industry and nature of the business to determine whether they justify the elevated leverage. Average liabilities have declined over the past 5 years, indicating improving balance sheet discipline and reduced financial risk. Shareholder equity has weakened over the past 5 years, accompanied by declining or negative operating income. This suggests the business may be eroding shareholder value and warrants caution. The share count has increased over the past 5 years, while revenue has continued to grow. This suggests the business may rely on shareholder dilution to fund expansion. Investors should closely monitor whether growth can eventually be sustained without dilution. The company have a dividend yield of 2.78%. The income statement shows that the company have been growing its revenue annually, but the operating income have not been increasing. This shows that the business is under pressure with rising cost. The primary drivers of revenue growth for a company can be attributed to several key areas. Firstly, the sale of medical products such as sterile IV solutions, infusion systems, and parenteral nutrition therapies has been a significant contributor to revenue growth. Additionally, expansion into emerging markets has also driven revenue growth, with a notable 2.9% increase in revenue from these regions in 2025 compared to 2024. The pharmaceutical segment has also experienced a 3.6% net sales growth in 2025 compared to 2024, further contributing to the company's overall revenue growth. On the other hand, certain segments have experienced decline in revenue, including healthcare systems and technologies and injectable and anesthesia drugs, which saw a -3.8% and -3.6% decline respectively. Forecasted EBITDA margins, terminal growth rate, and discount rate are also important factors that can influence revenue growth or decline. Furthermore, non-operating items such as tax incentives can positively impact earnings and may be a driver of revenue growth or decline. Overall, the company's revenue growth is influenced by a combination of these factors, highlighting the importance of monitoring and adapting to changes in these areas to ensure sustained revenue growth. The company's financial performance is a key indicator of its overall health and stability. A review of the operating cash flow reveals a positive trend for the company. In 2025, the company generated an impressive $951 million in operating cash flows from continuing operations. This figure is not only higher than the previous year, but also demonstrates a significant increase. A closer look at the data shows that the company's ability to generate operating cash flow has been consistent over the past 2 years. In 2024, the company generated $819 million in operating cash flows from continuing operations. While this figure is lower than the current year, it still indicates a strong performance and a clear upward trend. The positive operating cash flow is a testament to the company's efficient management of its resources and its ability to generate revenue. This financial metric is crucial for investors and stakeholders, as it provides insight into the company's ability to meet its financial obligations and invest in future growth initiatives. The performance of various segments and regions within the company has been mixed. On a positive note, the medical products and therapies segment showed strong growth, with pharmaceuticals experiencing a 3% increase and drug compounding seeing a 10% rise. The Infotech and their care and Technology and Ains drug segment also saw a slight increase from 2023 to 2025. In contrast, the healthcare systems and technology segment was not mentioned as performing poorly, but it is exposed to risks related to reimbursement. International markets and emerging markets performed poorly due to government control of expenditures and uncertainty due to procurement strategies prioritizing cost efficiency. The rest of world regions saw an increase from 2024 to 2025, while Europe, Latin America, Asia, and Australia experienced a decline. Certain product categories and regions were subject to increased demands for price concessions or limited access to sell products, indicating challenges in these areas. Overall, the company's performance was varied across different segments and regions, with some showing growth and others facing difficulties. The management is optimistic about the company's outlook, citing several key strategies that will drive growth and success. One of the primary focuses is expanding the company's global footprint, which will enable it to play a more significant role in increasing access to healthcare worldwide. In addition to its global expansion efforts, the company is also committed to diversifying its business through 3 distinct reportable segments: medical products and therapies, healthcare systems and technologies, and pharmaceuticals. This diversification strategy will help reduce dependence on any one segment and increase overall revenue stability. The management is also working to transform the company's cost structure by enhancing operational efficiency through various initiatives. This effort aims to improve profitability while maintaining competitiveness in the market. Furthermore, the company has made significant progress in managing its tax and foreign currency exposures. The favorable tax incentives in various countries have positively impacted earnings, and the company has implemented strategies to reduce volatility and risk associated with foreign exchange fluctuations. Overall, the management strategy is centered around expanding the company's global presence, diversifying its business, transforming its cost structure, and effectively managing its tax and foreign currency exposures. These efforts are expected to drive growth, improve profitability, and increase competitiveness in the market. The company has made significant moves in its business strategy through acquisitions and divestitures. In terms of acquisitions, one notable example is the purchase of Hillrom Holdings, Inc., Hillrom, in 2021. This acquisition marked a strategic move for the company, In addition to this major acquisition, there was also an acquisition of Hillrom itself, further solidifying its position in the market. These moves demonstrate the company's commitment to growth and expansion through strategic partnerships and acquisitions. On the other hand, the company has also engaged in divestitures as part of its business strategy. One notable example is the sale of its kidney care business to Carlyle Group Inc. for $3.8 billion on January 31, 2025. This move highlights the company's willingness to let go of non-core assets and focus on more strategic areas. Another significant divestiture was the sale of Biopharma Solutions, BPS, business on September 29, 2023, for $3.96 billion. These divestitures demonstrate the company's ability to adapt to changing market conditions and prioritize its core operations. The company has a history of rewarding its shareholders through both dividend payments and share buybacks. In terms of dividends, the company has consistently paid out cash to stockholders since at least 2025, with a total amount of $348 million distributed that year. The dividend payout per share for 2025 was $0.52. In addition to paying dividends, the company has also engaged in share buybacks. In fact, it issued approximately 1.3 million shares under its employee stock purchase plan in 2025. This indicates a deliberate effort by the company to reduce its outstanding share count and potentially boost earnings per share for existing shareholders. Concerns about inventory buildup and supply chain disruption are prevalent in the industry. Inventory buildup is a significant concern, with elevated levels reported on multiple occasions. This has led to write-downs of $113 million in 2025 and $15 million in 2024. The main reasons for this buildup include difficulty obtaining key materials, sole source suppliers leading to increased costs, and delays in gaining approval of materials and components from regulatory agencies. Supply chain disruption is also a major concern, with disruptions reported due to weather events, geopolitical events, and manufacturing difficulties. Increased freight costs and other supply chain challenges have also been noted, as well as the unavailability of certain raw materials and component parts. This has resulted in negative impacts on sales due to an inability to fully satisfy demand. The reliance on a limited number of transport service providers with potential delivery performance issues is another concern. Additionally, damage to or closure of sterilization facilities, issues with quality management or product quality, and dependence on third-party suppliers who may be unable or refuse to supply goods or services are also risks. Overall, the industry faces significant challenges in managing inventory levels and maintaining a stable supply chain. These concerns have been acknowledged by the company, which has identified them as risk factors that could impact operations and sales. That concludes the financial summary for Baxter International Inc. Feel free to comment below, and I will be happy to answer them when possible.